Hey Shannon, are you bummed you sold?
No, I still think it's a little early. No, I will say I think what you're going to see is that you're going to see a different investor for GE. So this was always a dividend-heavy stock. People felt it was defensive in nature, provided you with some financial and industrial exposure all in one swoop. I think that what you're going to see is that they're transforming to try to be more of a growth business, and so I think there will be investors for whom GE makes sense. But if you were one of the investors who's held it for many years as a dividend play, based on comments, that dividend's going to go down. And so I do think that there's going to be a period of transformation for GE, both from a corporate perspective and from an investor sentiment perspective.
Shannon, from what you know about the company, how much of the lift in GE shares this morning in the pre-market is simply because they think they're unlocking the value of that healthcare, that in fact it had a higher value, but when it was embedded in GE, it didn't realize it?
Well, I think GE's been the sum of the parts story for several years, and so I do think that that investors and shareholders are happy to see them unlocking that value. I do think the healthcare business was, potentially a good driver for them. So it remains to be seen if 5, 6, 7 years from now, if they, try to foray back into that space. But I think the Baker Hughes divestment definitely makes sense, and I think really focusing on power, which is what I think analysts have been looking for the last several years. I think that's why you're seeing the lift this morning.